Hey guys, welcome back. Let's look at some quick facts here real quick just to help you out. So, you've seen a lot of articles, you've seen me tell you they're BS. The articles saying that Iraq is going to devalue their currency or devalue the exchange rate even further. Let's look at this. So, here's an example of one of those articles. This article is from October 15th. The title of the article says the current financial situation and the call to reduce the exchange rates. Okay? Let's look at this article for a second. So, it tells you right in it that if the exchange rate of the dollar is reduced, if the exchange rate of the dinar is reduced to 1,500 dinars against the dollar instead of 1182 dinars against current prevailing dollar. Okay, so right here they're suggesting that they might need to reduce the value of the dinar, okay, against the dollar. And one of their excuses for doing it is they're saying that because they've gone into tremendous debt from borrowing, also due to the low prices of oil. But yet you did see two articles where they told you oil, which is where it's at now, okay, at $40 a barrel is enough money to cover their salaries. You've seen that. And they've also told you that they've reduced the deficit from 45 down to 20%. And they still have yet to show us the true numbers inside the 2020 budget. Okay. Now, so back to this, back to devaluing the actual dinar. Okay. Why would a country need to devalue the value of its currency? What's one of the major reasons, guys? It's part of it is inflation's a huge factor. Okay, so if a country has high inflation, let's read this real quick. It says inflation occurs when an economy grows due to increased spending. So if Iraq had tremendous debt and increased spending, okay, prices rise, currency within the economy is worth less than it was before. The currency essentially won't buy as much as it would before. When a currency is worth less, its exchange rate weakens. So they're telling you here that if due to debt or due to borrowing, mostly debt though, when countries have tremendously high debt, that spikes inflation, which also, look at what I've highlighted in green for you, it weakens the exchange rate. Okay, let's look. So Iraq, about all of this chatter from Iraq about reducing their exchange rate, guys, boils down to inflation. Let's see where Iraq's inflation really is, guys. Here's Iraq's core inflation chart. Okay, as you guys see, this is most of this year. There's a little bit from last year. As you see, their high point, which would have been around January, so kind of right here in the first quarter, guys, their high point was only 1.3%. That was their high point, okay? That's actually very low for being a high point. Look right here in April, guys, it was down to 0.1%, okay? In May, it was 1.1, blah, blah, blah. So here's July and August, the last two on the right. July was 0.5%. August is 0.4%. But again, guys, as of February, it was at the high point of 1.3, which is actually pretty low. Let's look at something here. I want to show you something. Here's some stats from the Federal Reserve. It says the Federal Reserve has not established a formal inflation target, but policymakers generally feel that an acceptable inflation rate is around 2% or below. So they're saying 2% is acceptable. They're not even saying that 2% is high or any of that. They're just saying 2%. Anything around 2% is acceptable. So 2% is fair and workable according to the Federal Reserve statistics here. Okay? And again, when I go back to Iraq's core inflation, in February, the high point, their maximum for this whole year was 1.3. Okay? And July was 0.5%. August is 0.4. Iraq has very low inflation. And yet, these articles are telling you that they might devalue the currency. Now do you see why, guys, based on facts and general information, I'm telling you these articles are BS? But again, you guys have to believe what's best for you. Take care, guys. Have a great day.